How's it going, FOREX traders? Just really Desmond Samuel. I'm back on the screen again, and this is the episode 3 of our Traders Edge series. So this is a series where I come on here to show you guys the market breakdown, then give you guys the privilege of seeing the market through my own lens and perspective. Yeah. So this series is particularly about breaking down 3 pairs. Yeah, the 3 most promising pairs. Okay. When you're to this channel, my name is Desmond Samuel. I'm a swing trader with 4 years of experience, and this channel is where I come to document my entire journey and then let you guys in on how I look at the market as well. All right. So before I get right through to my screen, please I urge you guys to go ahead and subscribe to the channel and turn on the bell icon as you do so. And then also, if you even like, YouTube recommends this video to more people so that you can actually help other traders and aspiring traders as well. Yeah. So in my previous episode, I called out the S&P 500 and then the NASDAQ and then the GBP/USD. So GBP/USD hit our first take profit initially from episode 1, and then it kind of like went into a range which is very typical, yeah, which I'm actually going to explain that in depth when we get to my chart. Yeah, so it's very normal. Yeah, and then because the market only trends for about 40% of the time, so for the rest of the 60% we're actually stuck in a range here. So now on the S&P 500 we're actually still en route towards our first take profit, which I actually broke down in episode 2, and then also NASDAQ just about to hit and then also NASDAQ. So NASDAQ is just about to hit TP1. All right, so all these trades are actually covered in episode 2, which if you actually did not get the chance to watch that video, I actually leave a link somewhere around here, like, so just check it out. Okay, it will actually help you, so just check it out. Yeah, so it should actually help you in terms of having a clear understanding, and then having so it will actually help you in terms of having a clear understanding as to what we're actually doing in this series. All right, so now if you're not a part of this, I strongly recommend, once again, click on that subscribe button and then turn on the bell icon as you do so, because I don't want you guys missing any trade. Yeah, you've seen the first trade call, episode 1, we take profit by the grace of God. GBP/USD hits take profit. All right, euro dollar, I didn't really talk about that one much because it was still in the range for me. All right, so but GBP/USD hit take profit, and now S&P is en route towards take profit, in profit now, and then also the NASDAQ is just a few points away from hitting take profit. So these are all the pairs. So far so good. 3 pairs are actually going well. So I actually want to head to my chart now and show you what's actually cooking on the S&P and then NASDAQ, and then also just like another review on the past, and then let's see what we can actually do and what's actually holding this guy back. Let's go. Welcome back to the inside of my screen. As you can see, like so, the first pair on the list now is the S&P 500. Actually came on here in episode 2 to talk to you guys about the S&P 500, and actually made mention of the fact that I saw that we could be potentially coming in for a deeper pullback, a correction of this entire impulsive run on the S&P 500, and that is exactly what is actually happening at the moment. So now quick one, if you look at the S&P 500 over time for the past at least 10 to 20 years, you can see that there seems to be a repetitive pattern on this index, because you actually keep making series of high highs and high lows. So this is like an ever trending index or pair. Is an ever trending index, so it just keeps creating series of new highs every single market cycle. Now what you see as a downtrend here is simply a pullback. It's just a correction of the entire length. This is why I strongly recommend you come on the higher time frames to do your own analysis, preferably on the weekly time frame. So this gives you like a broader perspective and overview of the actual stuff happening down there in the lower time frames. All right, so this is a low, this is a high, this is a higher low, is a higher low, higher, like so. So technically speaking, when it comes to the external structure, we're actually putting a series of high highs and high lows. So we are significantly bullish on this guy, and this has not changed at all. So this has been the case for the past at least 10 to 20 years. Yeah, so now the S&P 500 actually got here. Now, one thing I learned about the S&P in my study time was that whenever we are overly extended, that is to say, when we're actually putting a very steep trend, one of the ways you correct before we actually come to correction is that we give a hint either as a chart pattern or as an arc. Okay, so honestly, I think I'm going to give a name to this chart pattern, to be honest. This thing here, I think I'm going to give it a name. All right, so remind me, guys, to give this chart pattern a name. I don't really know what to call it yet, but this thing is actually very repetitive. If you look at the market, the past in 2023 bearish run, we had a similar thing here. So I'm going to give this guy a name, the arc. I'll call this the downward arc. Okay, so this chart pattern is now called the down. Guys, take note. The downward arc is the name of this chart pattern here, named by Desmond Samuel. Yeah. So now we're making series of high highs and high lows here, and whenever the market wants to come in for a reversal or maybe for a correction, okay, it gives you a hint, and in this case was a double top. Yeah, but in this case it's downward arc, named by Desmond Samuel. All right. So now this just the weekly time frame perspective. So it just gives us a rough overview of what's actually happening, so that we kind of like get like a bird's eye perspective, like a feel of the entire trend. Okay, you just get like an overall perspective, like what is actually happening overall. We are actually still in a bullish trend. All right. So one of the things you must know is that once you get onto your daily time from the 4-hour time frame, your daily must match up with your weekly time frame and your monthly time frame. Then your 4 hours where you actually go to execute the trade. Yeah. So now that we have actually established the fact that the weekly time frame overall is actually very bullish. That is to say, we're actually making series of higher highs and higher lows. So you already know what to look out for once you come down to your daily time frame. Is that this guy is just coming down here to give us what, a higher low to continue higher. Very, very simple. Yeah. So scaling down to the daily time frame like so. This is exactly how it looks. All right. So now remember, we have a trend and ascending trend, which I didn't actually speak about on the weekly time frame. This guy is ascending, as you can see. So this is a low. This is higher low, higher low, high. So every new low is higher than the previous low. So this already lets you know that, provided that we stay within the context of an uptrend, we are going to keep seeing a series of high highs and higher lows in the market. All right. So now what we should be expecting here is what, a corresponding higher low from this other low. A high low from this other low around this level like so. Okay, so now this also gives us the premise as to why we can actually go short on this S&P 500. You feel me? So scaling down to the daily time frame like so. Scaling down to the daily time frame. So this downward arc chart pattern that we actually saw here like so. So I said to myself, okay, one of the things that actually qualifies a chart pattern is if you actually break out of the range, because every chart pattern is first of all a range. You get me? So when we actually do break out, that's when that chart pattern has been validated. Yeah. And in this case here, I actually saw that happen on the daily time frame. Now, mind you, I didn't go on the 1 hour time frame to look out for the breakout. I stayed on the higher time frames. You know why? Because they are a lot more solid and a lot more authentic. Yeah. So I actually waited for this guy to break out on the daily time frame. I actually did that. Closed 3 candles outside. That was good enough for me. If you mean that I have one weekly candle engulfing, or maybe 3 or 4 days of candlestick that has traded outside of the range, and that in this case it ticked the box for me. Yeah. So what I simply did was I scaled on to the 4 hour time frame. Okay. Now remember, the narrative is to come and do what? Create a higher low from you, so we can actually go higher. So everything you do from this point to this point, actually you're just maximizing on the short-term trend in the overall trend. Do you understand? It doesn't change the overall trend. This is just you capitalizing on the medium-term trend from here to here, like so. You get me? So whilst you're waiting for the market to line up with the overall trend, so they can actually go ahead. So in this case, make money both ways, because you're actually able to understand both market structures. You get me? So now, coming to the 4 hour time frame like so, this is a high, this is a low, lower high, lower low, lower high. So technically speaking, for us to actually continue high, we must come in and give us a lower high. Okay, so this was what actually happened here like so. So what I simply did was, first of all, I tried to connect my trend line, because I like to see at least 3 or 4 confluences. Yeah, so I went from the very top like so, extended the guy into the future. Okay, so this was how I actually look like. So I had the first touch, second touch, third, fourth, fifth touch here. So this trend line is actually quite solid. 5 touches. All right, so this trend line. So this trend is actually very solid. 5 touches so far, and the market kept on respecting the trend line. Okay, so that was check box 1, and then we had a Fibonacci play like so, from swing high to swing low. I think I'll make a video now to use Fibonacci once and for all, guys. So from swing high to swing low, in this case, because it is in a downtrend here. So from swing high to swing low, this is where the market pulled back into. All right, so when I saw the market actually pulled back into my 0.5 and 0.6 when the region, then I waited for a bounce out of that range like so, and that was very, very amazing. So what I ended up doing was very simple. Okay, I scaled down to the 4 hour time frame, as you can see like so. So entries look something like this. First of all, this is a structure, yeah. So entries were something like this, 4 hour time frame, break off counter trend like so. Okay, and then entry was here like so. At the entry was here. Good. All right, so we targeted all the way to the downside. That is exactly how you make money on S&P 500. All right, so this was actually how we actually broke down this pair, and so far so good. The markets are actually moving well in our favor. All trades are actually broken even, all entries are actually broken even on this pair like so. So we have no risk in this market. Everything is actually running risk free at the moment. So S&P, where do we actually target S&P now? So we're actually approaching a very significant level where I do believe that all things being equal, we might see the market stall at this level a bit. We might see the market, start to move sideways at this point at 6,360 basis points. You know why? Because the market actually moved sideways in the past. All right, so you always want to look left. Okay, look left at all times. Yeah. So in this case, yeah, this is it. All right, so I will not be surprised to see the market stall a bit around this level. Okay, waste some time. So I do believe that from here to here, you're going to have multiple entries here. So for those of you who actually missed out on the initial entries at this point here, where they're out here, the market is actually going to stall here, may actually stall here and then come in for a pullback. The market is most likely going to stall here. Once it does, it will pull back and then give us another entry somewhere inside of it, like so. Don't actually know this guy all the way to the downside. So we had multiple entries here. So this was a 1:5 risk reward trade, and then this will most likely be maybe a 1:3 risk reward trade. So plus or minus, you're having like 1:11 risk reward on one single move on a pair. All right. So now let's look at the NASDAQ real quick. NASDAQ, on the other hand, also had a very sweet structure for us. Again, looking at the structure now, by the way, guys, if you have a trade on the S&P 500, do well to check with the NASDAQ. Okay, they tend to move in the same direction. All right, so whatever thing that the S&P does, NASDAQ always tends to follow suit, and then also US 30 and even the German 30 as well. Yeah. All right, so similar structure as we had on the S&P. So this is a low, this is a high, higher low, higher high, like so. So for us to actually continue going high, you must come in and put in a high low at this point here, like so, which is a no-brainer. Yeah. And then also one of the ways to actually know when the market is overextended is by the use of Fibonacci. So now on the NASDAQ, I actually saw a double top on the weekly time frame, but that wasn't enough for me. You guys know me, yeah, confirmations always. So I said to myself, I'm not executing any trades until I see that we're actually out of this range, because every chart pattern is first of all a range. Do you understand? So looking at this closely, we had a double top here. So I said to myself, I only trade this guy once I see a breakout, and weekly time frame gave us an engulfing breakout bearish. This was enough for me. So what I simply did was I actually scaled down to the daily time frame. Now, mind you, again, we have a narrative here. A narrative is to actually follow this guy all the way down to this trend line potentially, or this blue bar, like so, and then see what happens here. So everything that happens here is to fulfill a bigger grand scheme of continuing the upward trajectory of a bullish run. Okay, so now what simply happened here was that we shifted trend from series of high highs and high lows to a series of lower lows and lower highs, which will be a big clearer on the 4-hour time frame. Okay, yeah, so that's it. So this is a high, this is a low, lower high, lower low, lower high, lower low, lower high, obviously lower low here. All right, so that's exactly what's happening in the market. So long story short, exact same way we entered the S&P 500, which is one of the benefits of trading the S&P, is that you can actually mirror the NASDAQ and then the DAX index and US 30. So simple things, swing high to swing low. We actually saw the Fibonacci play. All right, for our candle breakout of the counter trend line, it was a no-brainer. Yeah, so easy peasy. Trades is actually in profit at the moment. So this one too was a 1:5 risk reward. It's actually headed in a direction. So first TP was smashed, and we are en route towards second TP, which is at 22,800 basis points. Once you breach this level, guys, we got space all the way to 21,500 basis points on the NASDAQ, guys. And lastly, guys, we have the pound sterling, like so. So in my episode 1, I actually called out pound sterling to the downside, and I actually stopped calling out the pound sterling because we actually went into a range. And you guys know I'm here to give you guys the absolute best of 3 pairs that actually have what it takes to pay us at the moment. You feel me? So now the weekly time frame still remains. I mean, this is a huge chart pattern here. This is a double top on the weekly time frame. This is quite significant here, no doubt. But we actually went into something very, very concerning. And I said to myself, you know what? I owe you guys, absolute best. You feel me? So I come on here to give you guys the best pairs actually ready. So once I noticed that although we actually made money from this trade, I mean, we shot this guy from here, shot this guy from here, we made money from this trade here. I noticed that over time we actually came into we actually broke out of this downward trend like so, and we're starting to point to the upside. So once I saw this bullish engulfing daily candlestick break, said to myself, you know what, let me just steer clear of the pound sterling for now. Let me just allow the market just figure out his thing, because I'm not here. Listen, guys, I'm here to trade the most obvious pairs, the most obvious stuff here, the most obvious stuff. So when I saw a breakout here, and then this was a higher low from here, no. I said, you know what, that was when I actually tilted your attention away from the pound sterling towards what? The S&P and NASDAQ. You feel me? See, these are the things that the course will actually teach you, because most people do not really understand that these pairs, you have to be an investigative trader. You feel me? So long story short, Well, as you can see, we've actually broken all the way back down into the trend line, but I wasn't going to take any chances with this trade at all. Yeah, of course, we had like if you can actually play at from swing high all the way to swing low, like so, which I mean, it made sense for anyone to actually want to go short on this guy, but I'm very conservative. Okay, in as much as I trade, I'm I'm very conservative. For now, we're actually still en route to our final take profit at 1.31463. Remember, first TP was smashed at this level, like so. The market just kind of like pulled back, which is always very typical with this trade, with this market. Yeah. So long story short, one of the reasons as to why I actually mentioned that you actually stick to the take profit of 1.31463 was that, you know, if you look at the weekly time frame, anything that happens in the weekly time frame is actually very significant. It's not something that you throw caution to the wind about. Yeah, anything that happens on the weekly time frame of any pair is actually very significant. Yeah, do not throw caution to the wind. When I saw this ascending trend, I said to myself, you know what, let us end our first drive on the pound sterling at least to 1.31463. Anything that happens around here will decide what we actually do with the pound sterling moving forward. But for now, okay, we got like, I think we had like 317 pips drop on the pound sterling from the point of our entry all the way to the point of take profit. So I mean, we actually made something from this pair here, because the first entry, remember guys, first entry was here. Okay, check the episode 1. First entry was here, right? So actually made money from this guy. From here to here, we got roughly 317 pips. So TP has been smashed for take profit 1 and 2 actually. Now we're actually en route to hitting take profit 3 at 1.31463. But for now, whenever this market gets to 1.31463, please be careful, because at this point here, anything is possible. It's a bit of a 50-50 here. Anything is possible. It's a bit of a 50-50 at this point here. So please be careful. With that, we've actually drawn the cutting close on Q1 2026. So we've got our 4 pairs so far. The euro dollar, the pound sterling, the S&P 500, and then the NASDAQ. And all these shows are going to head to smash take profit. So leaving us with 100% win rates in the Q1 2026. That is absolutely amazing. That is amazing. All right, so once again, round of applause for you guys that actually took the trades with me. Okay, so this leaves us going into Q2 with absolute confidence and a bit of a buffer, because we have some, you know, pips in our pocket, and then we got some confidence, you know, to actually approach the market even, you know, in Q2. By the mercies of God, we'll actually see how things go in Q2. All right, traders, so you see for yourself, this level of mastery is very attainable. Okay, you can absolutely get to it. I can promise you that. Okay, so one of the ways to get there is that the pin, actually that's even the only way to get there for you. The pin comment like so has a link to the course. All right, so grab it, save yourself the stress. Listen, we've got 4 quarters in the year, and the first quarter is actually out of the way already, so we've got 3 quarters left. You can still make a lot of money this year. All right, so we've got 3 good quarters left to actually make money in the market. Believe me, it is still possible. Your financial goals are still possible, but the first step is to get the proper education. Okay, get the quality education. Money that you're looking for is a byproduct of what you do or who you are. Okay, so grab the course, learn how to trade profitably, see the system that we actually use, apply it to your own system. Okay, fine tune, you know, your trading strategy, and then come on this other side of the winning side. All right, so for now, subscribe, turn on the bell icon as you do so, and then also guys, leave a like, and then let me know what pair that you actually want to see me break down in episode 4. Okay, be your USD card, USD searcher, whatever pair you have. Okay, so let me know in the comment section what pair that you actually want to see me break down in episode 4, and I'm here to actually do that for you. All right, so once again guys, my name is Desmond Samuel, and I'll see you guys in the next episode. Trade safe.